Now, since they can print money to infinity, once that momentum starts on the downside, they'll pound it. They'll come in and start selling like crazy, knowing that that momentum has changed in their favor. Well, I've had a couple of interviews since, the breakout, and, the breakout, by the way I analyze the market, certainly has taken place. We broke out from the overhead resistance level of roughly 35 in US dollars,
Mm.
and we got above that 3 days in a row on above average volume, and it's continued to climb, and it's backed off a couple of days here and there. The back offs have been very slight, pennies versus dollars. So the breakout, as far as I'm concerned, is there. And yet, even with my Morgan rule that I just outlined, it's 80% accurate. So it's not 100%. So is it
Mm.
possible that, silver gets under 30 again? Yeah, but the probability is very, very low. So the big question, I think, now is where do we go from here? But before I answer that, I'd like to just mention that price is what everybody looks at, and there's lots of ways to analyze markets from a technical perspective. I've learned probably all of them and forgotten probably more than half of them. But uh, point and figure charts are one of the best. No one even knows what those are anymore. But silver's broken out from that basis, which is a very strong indicator for someone that's really technical or old school. And the other one is
Mm.
momentum. And I have a friend that does momentum analysis, and he's very, very good. And momentum in engineering is mass times velocity. So if you have a
Mm.
great big ship, that's a lot of mass. And velocity, it could be going any speed, but if you got a lot of mass and it's going at 10 knots, it's going to take a long time to turn that ship around. Whereas if you got a speedboat that has small mass, it'd be very easy to turn it around. So the point I'm making is that on a momentum basis, we have gotten a breakout, and that's more important than a price breakout. So I wanted to point that out, and I'll get you his
Yeah.
name here in a
Yeah.
moment. Michael Oliver. Sorry, it's Michael Oliver is his name. So I want to shout him out. It may have been that fast. I know you're right in the ballpark. I mean, I have to look at a chart to verify you, but yeah, so there's a lot going on. So we've got momentum, we've got price, we've got interest, we've got all kinds of chatter on Twitter. All the silver guys have come out and started talking. A lot of them are giving these real wild projections. I'm a little more conservative than that, but I think we're on our way. What's the gold silver ratio going to end up at the top? That remains to be determined. But I think there's a lot to consider here with what's going on. Yeah, I mean, the situation is rather bizarre. The wholesalers are just inundated with inventory. In fact, you could go to a friend of mine's website and you could buy constitutional silver, known as junk silver, in the trade for 70 cents under spot. That's the price you could buy it for as a retail investor. The
Wow.
wholesalers are doing whatever they can to try to offload inventory because they've got to make a two-way market. And so if someone sells, make up a big number, $10 million worth of silver, some of these wholesalers don't have that much ready cash, but they have credit lines. So they borrow the 10 million, they buy back the silver, and now they've got what 4% interest rate. So not only do they buy
Mm.
it back at maybe a discount to spot or maybe at spot, but now the clock is ticking because as like a car dealer, the longer that car's on the lot, the longer those bags of silver or silver bars or silver coins are sitting on the shelf, the more they've got to pay an interest cost to hold them. So they want to get rid of that inventory. And the retail market's dead. I mean, dead's probably not too strong a word. And yet we see the price going up and up and up. And that's to
Wow.
prove really that it's the derivatives market that we're watching. We're watching what the price of a paper contract is in silver or gold or platinum for that matter. And there's a huge um, push that is really killing the shorts. I mean, a lot of this rally has been short covering. And so,
Yeah.
where's this going to end up? And, I know how it ended in 2011. I mean, I'll tell you ahead of time. basically what happens is the smart money, if you want to call them that, the bullion banks, the commercials, the people that really know how these markets operate because they are operators of these markets, they will get to a point where they're caught short. And it happens very rarely. What they'll do is they will step aside and they will not basically put on any contracts. I'm using a broad brush here. It's not exactly this, but it makes the thought process more clear. So they step aside and don't do any shorting. And so now the market's driven by the funds and the retail market. So now it'll exhaust without them in participation of it. So now the price goes higher and higher and higher, but there is no retail buying, but there's some, but very little. But the the trading funds may be buying, but eventually it'll exhaust. So they wait for it to exhaust, and then it'll start to come down. Now, since they can print money to infinity, once that momentum starts on the downside, they'll pound it. They'll come in and start selling like crazy, knowing that that momentum has changed in their favor, and then they'll start to really. So now what happens is the funds will have to start exiting probably at a profit. Let's say they're long at 35 and price goes all the way to 42 and then it exhausts. Then at 42, the banks know, okay, now we've got momentum has changed. We could start shorting. So it's short at 42, it goes down to 41, short more at 41. The bank was in at 35 and now it's at 41. So let's take a profit here, which is more selling. Selling on top of selling. The banks are shorting and the funds are long and they're selling to get a profit. Those trades have to match. If somebody wants to buy it at 41, there aren't many people. In fact, there are none. No one wants to buy it at 41 on the way down. They'd love to buy it at 41 on the way up. So now what happens? The next match is $38 the ounce. I'm exaggerating for effect. So that's where you get the gap in the chart. So no one wanted to buy it at 41, but a lot of people wanted to sell it at 41, but they don't match. So now the next match is at 38. Again, I'm doing it for exaggeration, but that's why you get a gap in a chart. Happens in corn, happens in wheat, soybean oil, cotton, cocoa, doesn't matter. It happens in the commodities markets. But this is what drives me nuts as far as the futures markets, and I'm not against them. I'm just against them being used in the manners that they've been used. And it's not just in silver, although silver's the stellar example. I mean, there's more, paper shorts in silver versus the actual reality of the physical market than any other commodity by far. In fact, it's in the metals by far. But nonetheless, am I predicting, a big sell-off at 42? No, I'm just outlining how the futures market works and why you don't want to get too excited if you don't have that retail pressure on the market. Now, let's look at the other side of the coin. And actually, the most important side is investment demand. That's the swing factor. That's what is ebbs and flows. That's what makes a market a hot market or a bear market. It's the margins, the people that buy silver for investment. But 60% of the market is industrial, and that doesn't go away. It can ebb and flow, but mostly it's pretty steady, and the trend is clearly higher and higher. So that demand is out there. I'm looking for, I think the best case scenario is over 40, but let's say I'm wrong and it gets all the way to 50. Many of my friends think it's just going to go through 50 like a hot knife through butter, the old cliche. It may, but I have a hunch it's going to stall out at 50 and then consolidate and maybe come back and go through it. But it's tough to look at all aspects of the market. And if we had investment demand, if retail wasn't buying and they're not, but institutions were, and they're coming in and this big pension fund bought, $50 million worth of silver, and another pension fund bought, $200 million worth of silver, and hedge fund came in and bought, I don't know, 50 million ounces or something. If those things are happening, I'd be much, much more confident that, we're going much, much higher very quickly. But until this short paper situation is resolved, which as I just explained how quickly it can be resolved,
Yeah.
I'm just going to hold my positions. I'm not going to add. Um, I'm just going to wait and see. I mean, I really would rather give out news and tell you the institutions are coming in hand over fist like the banks have in the gold market. Silver doesn't have that luxury that it's considered to be a monetary metal by institutions. It's sort of the mavericks, it's the one offs, it's the free market thinkers, it's the people that can think on their own, are willing to take, let's say, a higher risk for a higher reward because that market is much smaller than the gold market. And if you really want to talk Turkey, let's mention platinum. I mean, the commercials are
Yeah.
long in platinum. Now, with the commercials long in platinum, that gives me um, more conviction that platinum's still going to keep running without too much resistance, at least for a while. But the commercials are not long in silver; they're very short.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.